The stock market is pushing higher the day before the FOMC decision. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today's SPY was up 1.31% and we did gap up and close near the high of the day, and the price action is back above all the moving averages. Now keep in mind, we have gaps to fill now on both sides of the trade. We have the gap up here at SPY 408, and now we have the gap down here at 394. This is one of those battle of the gap scenarios where it leaves you guessing which gap is going to fill first, and the best way to know which gap will likely fill first will be following price action. Remember, we had to break back over the 200 daily moving average for 2 days in a row, which meant we were likely going to push for the next level higher, which was this resistance up here at 400, and we are very close to reaching it. The bulls did not bother battling with the negatively sloping 20 daily moving average because they simply gapped above it and then used it as support, which was the top of that gap of support right around 396. So now that the bulls have support at the 20 daily moving average and the price is above that level, there is a good chance they're going to try to keep that gap open. But tomorrow, with it being FOMC, there could be plenty of volatility. So there is going to be a very good chance that gap does try to fill tomorrow. So it's going to be whether or not the buyers show in before the gap fills. So a very likely scenario tomorrow would be look for a rejection at resistance at 400 and then an attempt for the bears to push price back down to close the gap. It's instantly more bullish if price can break above 400, and then we have the resistance trend line right around 403. And then if we break through all of that resistance, we are looking for a very quick trip up to fill the gap at 408, which currently is outside the upper Bollinger Band. So there's still a little over a week left in March, and typically speaking, that is going to be a very volatile period in the markets, and we can clearly see why that's going to be the case just looking at the price action and the two gaps to fill. So know this critical resistance at 400 and the support levels below, and you can stay bullish in SPY above the 200 daily moving average with that critical support level of risk at 393. On the NASDAQ 100 triple Qs, we were up 1.43% today, and there's no surprise the tech sector has been very strong and is continuing to push higher. Just like SPY, the tech sector also gapped up and did not close the gap to the downside, which is this level right around triple Qs 306. We pushed back above resistance at 307, and it was a very smooth ride higher to our other resistance zone between 311 and 313. That's going to be the critical resistance tomorrow during FOMC, and as you can tell by looking at the price action, we are currently outside the upper Bollinger Band. Now those bands are expanding, and in a bullish scenario, we can continue to ride the upper Bollinger Band to higher prices. So look for that bull breakout on a break above 312 on the daily chart, and the critical support levels will now be 307 and the gap fill at 306. And if we break below that gap fill and this support zone right around 305, we're likely coming all the way back down to 300. Now keep in mind, this is impulsive price action to the upside, so it does look possible that we are likely going to get the bull breakout and reach those upper price targets. In the Dow Jones, we were up 1.03% today, and the Dow Jones gapped up above the 200 daily moving average, which was that critical resistance level, which is now support at 324. That left the gap to fill to the downside just below 323, and we have the critical upside resistance right here at the negatively sloping 20 daily moving average and resistance zone between 326 and 327. Above that, we have the resistance trend line and 50 EMA right around 330. And if we can break all of that resistance, we could make an attempt to retest the daily high at 335. If we break down below support at 324 and close the gap, then we're still looking for that critical support down there at 318. And below that, we're looking for the gap fill at 311. On the Russell 2000 IWM ETF, we were up 1.84% today. And as you could tell from the daily candle, we are still giving back a lot of the intraday gains, and we are closing with these doji looking candles. So if you look at the candle body, we really just closed exactly where we opened. So it was just a gap up, volatile day, and closed about where we opened. That leaves a downside gap to fill right around 175, and we still have the upside gap to fill right around 181. We still have this critical resistance at 177, which we continue to test but cannot close above. So it will be considered a bullish breakout if the small caps can break above 177, and then we'll be looking for that gap fill at 181. A rejection from 177 brings us back down to fill the gap at 175, and then a retest of the critical support at 170. On the ARKK ETF, we were up 5.55%, and as you can tell, we are back above 39, but we are running into this critical resistance zone right around 40.5. This could be a double top rejection and a continuation to the downside. So if we do get rejected here and come back down and take out this low at 36, this is going to look like a double top from 40.5. So do keep that in mind that we need to break that level to invalidate that possibility. With that gap to fill to the downside, it does look like this would be the perfect place to see a rejection in the ARK ETF. So that is going to be a very critical resistance level. If we can break and close back over that, then we can start running back up to 43 and 44. So there's going to be plenty of more upside if we do indeed get the bull breakout. So just wait for the price action to confirm it. Downside support levels is still going to be the zone right around 38 to 39. And then below that, we have support right around 36 to 37. On the VIX, we were down 11.47% as the VIX is getting crushed back down towards our level right around 20, which is going to define whether or not we can go into a bull trend. Tomorrow should be a very critical day for the VIX with FOMC. We're either going to clear the air with the financial sector or we're going to get more fear and uncertainty, and we're going to see it in the VIX. If everything is fine and dandy and Jerome Powell says there's no issues in the banking sector, I would expect to see the VIX crushing back down below 20 and then a continuation of a bull trend. On Bitcoin, we're currently up 1.25%, and Bitcoin is still trading around this critical resistance right around 28,000, and we have no clear daily closes above this resistance just yet. But if we do get the breakout, our next level higher is going to be 30,000. If we get rejected from here, we need to hold the support, which is the breakout level right around 25,000. On Google stock, we were up 3.66% today, and Google continues to climb impulsively, slicing through another resistance level at 102, which means we're likely coming up here to 106. Above 106, we'll likely fill the gap at 110, so there is plenty of more upside potential, and you can be a lot more bullish back over the 200 daily moving average at 102, so use that as your critical support. On Amazon stock, we were up 2.97% today, and Amazon did bounce off of that support zone right here at 98, and we did get another daily higher high close above 100. We still need to clear this critical resistance at 102, and then we can reach our higher price targets at 109 and then 115. If we lose support at 98, it means we're likely coming back down to 96 to 94, so there is going to be plenty of support just a few dollars lower. On Microsoft stock, we were up 0.57% today, and Microsoft looks like it's getting ready to finish this cool down because we are way outside the upper Bollinger Band, and we did hit that resistance at 283. It looks like we're finding buyers above the positively sloping 5 EMA and support zone right around 270, so that's going to be bullish as long as support at 270 is holding up. If we lose support at 270, we have stronger support down here at 267, and if we break resistance at 274, look for a retest of 283. On Nvidia stock, we were up 1.15% as we continue to climb higher and bouncing off of the 5 EMA, and we're very likely trying to reach that next price target between 267 and 268. It's a bull trend as long as we're above 244 or the support trend line zone right around 250. On Tesla stock, we were up 7.82%, and it does look like we had the gap up outside of our bull flag look, which just meant we had to get the break back over 187, and with the gap up in today's price action, that was very easily a bullish breakout, and the bulls took advantage of that and pushed all the way up to the resistance at 197. So as you can tell, we are sitting right at resistance at the close, so tomorrow we need to hold above 197 to reach our next higher targets at 207 and then 215. If we get rejected from resistance, we'll be looking for the gap fill below at 186 or support at the 20 daily moving average at 190. On Apple stock, we were up 1.19% today, and Apple has the second day of confirmation that we are getting this inverse head and shoulders on the breakout above 156, which should send us to our next higher price target at 163. I don't see a lot of resistance to get there, so it should be a relatively smooth ride as long as Apple can hold above the breakout at 156. On the financial sector, we were up 2.53% today as this dead cat is continuing to try to bounce, and we now have a gap to fill to the downside, which is possible this gap does not fill if Jerome Powell can clear the air with the financial sector. So while there is a very large gap there, there's no guarantee it has to fill if everything goes well tomorrow, so look for the upside resistance above. On the industrials, we're up 1.16% today, getting back over the 5 EMA, but we now have a gap to fill to the downside just below 98, and there's still a good chance while we have the bear trend that we're coming down towards 95. On the healthcare sector, we were up 0.61%, getting back over the 20 daily moving average, but still in a downtrend while we're trading below 129. The energy sector was up 3.46% today, closing the gap above, just above 80, and this is exactly what we were looking for to fill the gap to the upside before we come fill the gap to the downside. So I think there's increased risk to get rejected from this resistance and come down and close the gaps at 78 and then 73. So jumping back over to the S&P 500, tomorrow there should be plenty of volatility with FOMC, especially because we need to find out what's going on in the financial sector. We're very likely going to get a very large move in both directions, and I'm expecting plenty of intraday volatility, but as long as you have a trade plan that's around following price action and you know the critical levels, you should do just fine. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, you need to come join us over at the Stocks Channel Discord. You can find out how to join the Stocks Channel Discord by clicking on the link below. I also have a trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.